Let's take a look at some information and charts on Chainlink for Brave New Coin. Chainlink is a decentralized Oracle service that provides tamper-proof inputs, outputs, and computations for advanced smart contracts on any blockchain, according to the website. I think most of us are familiar with what oracles are, their purpose, what they serve, what they do. Mainly price data, but that's expanding as more than just DeFi becomes more popular. How this generally works is data gets added to Chainlink, sent to any chain, and it can go back and forth. And this is done through Oracle services. So you have multiple data points coming together to make one data point. There's no single point of failure with those data points. And it's mostly been price stuff for all these oracles. That's really kind of the most important thing is price. Most important thing for crypto is speculation, trading volume, activity. That's just the main use case of crypto in general. So there's all these oracles, and individually what they look like is each oracle will have a series of individually trusted operators that may or may not have downtime, may or may not deviate from averages. But in general, most of these collectively are trusted to some degree and then together provide data for Chainlink to spit out and say, this is the trusted price, this is the oracle price. There's deviations, there's response time, all that stuff is important, but these are the data values that feed into DeFi for lending and borrowing, for trading, for DEXs, for all this stuff. It's important when everything is talking to one another. So this is an ERC20 token. They did a token sale a long time ago, and currently there's 45-ish% in circulation. They have a proof of stake component coming eventually, but currently they're just selling tokens, them being Smart Contract Limited, the holding company. They're selling 6 to 7.5 million per month, have been for quite some time. And I have this argument every single time, but you can tell me whatever you want to tell me if you're in the Link community, if you're not in the Link community, I don't care. They're selling a significant amount of tokens per month, a significant amount of notional value per month. I'm happy that the devs are making money. I'm happy that they can do business development. I'm happy that people who got in early are making money. I'm happy about all that. But from a supply-demand perspective, if supply outpaces demand, then price goes down. So you're hoping, as a holder of the Link token, that demand will outpace supply here. You're also hoping that eventually they're going to get rid of this. Circulating supply is going to be increasing over time. The quicker they get rid of this entire stack, the better. Then you'll have a true sense of fully diluted value in the market, if the market can absorb that. And we can talk about exchange reserves for Link and all the other nonsense. That's fine, but the company behind Link is selling their tokens, while at the same time the community is telling me I'm supposed to be holding tokens. It's just a paradox divergence that isn't great, you know. And yes, they're hiring 1 million people, right? Like, look at all these job listings. I love it, perfect, whatever. But do they need the equivalent in notional USD per month? I don't know. I'm not a business person, right? But it just is a bit weird that they're selling this amount kind of as quickly as they're selling it. Anyway, that's my spiel on that. Number of Oracle calls is kind of flat here. Call contracts on the network are increasing over time. Not too much to read into there, just it kind of is what it is. But if we look at the token itself, transaction counts down significantly, rising slightly. Average transaction values kind of maintaining steady with price here as price reverses. In general, in a vacuum, when I see transaction counts this low, I'm not super bullish, but the flip side of that is price is where it's at and transaction counts are where they're at. If transaction counts double, triple, quadruple from here, that should mean price moves higher significantly. That's another way to look at this. So if we see increases in speculation, you're definitely going to see increases in on-chain activity there. Active addresses as well at the lows, but also curling up. Very similar mentality. If you believe this to be bullish, then you're thinking if active addresses triple, then price should increase significantly. NVT is telling you, based on historic activity on-chain versus market cap or price, we're at the lows here. This should be bullish as long as this holds the lows. You don't want to see NVT spike way up. If we pop on price relative to NVT, not too much of a signal here, but in general, you want a declining NVT relative to price. Just says there's more upside potential. I prefer MVRV over NVT. MVRV's market cap versus on-chain activity. In general, most coins have a 2x multiple here, meaning market cap can get 2 times greater than on-chain activity before it pulls back, before things get too overbought. And if we look at 2 as an MVRV historically, that's been the top once, twice, 3 times. And the 4th time, you had a bit of a weird divergence here between a falling MVRV and rising price. So I don't know if that's bearish divergence, bullish divergence, whatever. Maybe it's bearish, I guess, right? It acted as a bearish divergence, certainly. So it's something to look for in the future, but it did drop below 1. Currently, it's at 1.15. So again, you could say this has a ways to get to 2, the 2x multiple yet. And if you're just looking at fundamentals, you're thinking there's a considerable upside here based on MVRV and its path to get to 2x plus. So fundamentals aren't terrible. People know what Link is. People love Link. The community loves Link. I get all that stuff. It's just the token selling really sours for me to see it to the degree that it's happening. And you can even argue as a percentage of monthly volume, it's next to nothing. I get that. I understand. It just kind of is what it is. Here's Chainlink Google Trends. They're flat. It's just, not too exciting. All of crypto kind of looks like this. Nothing's really at a mega all-time high right now. But as price starts to pick up, you're probably going to see increases in Chainlink search activity, articles online, SEO stuff with Chainlink. It's going to be increasing as well. Moving on to technicals, the simplest thing you can do with anything, if you're expecting higher highs, take the previous local high, take the previous local low, add Fibonacci extensions, you get a 1618 and a measured move. So a 2x multiple would be 100 essentially. 1618 would be 77. So I like that area if this thing can make an all-time high retest. So once you establish a local low or a range low, the expectation is that this thing eventually pops back to 50% retracement. Then it'll make a decision from here. Do we get bullish continuation to all-time high? Then we get another decision, right? Do we get bullish continuation past that? So this had a pretty aggressive triple bottom inverted head and shoulders type of setup that bounced along with everything else. And it's currently on its way back to 33 as a 50% retracement. If we look at the 365 MA in the green here and the MA multiple 5x that in the red, historically anything below the green MA, anything below the 365 MA has been a decent buy opportunity over the long time frame, long time scale. You can see this took 8 to 12 months basically to get to the high previously. March to September was much quicker, and then it never got back into that low before it went up again, but then never got quite as high. So maybe the expectation is here that this thing, because it got to this yearly low on the MM to the downside, that it can actually reach the upside potential of 105 plus, right? This will move up slowly over time, but this thing could catapult that high. But this definitely was a buy zone down there. Historically, over Link's history, it hasn't really held a bear cross for an extended period of time. This thing looked very ugly coming into July, coming into August, whatever it was. Just super aggro selling to the downside. And if 10 broke, it would get extremely ugly. All of crypto would have to be selling off at that point, I think. So rising tide lifted all boats, including Link. Definitely helped here. And it's teasing a bullish cross over the next couple days. Historically, these bull crosses have lasted a long time for Link. This previous one lasted from 2019 to mid-2021. So it's hard to get bearish when you're seeing a bullish cross there. R5 for this year is at 60, 65, whatever that is. But I could certainly see 100 end of year after this low holds or held. And if Q4 is bullish for all of crypto, this thing could just keep going. This was the multi-year pitchfork. All this stuff is a variation on the theme as far as trend is concerned. What do the MAs look like? What does the 5200 look like? If it follows all of that stuff, it should have a pitchfork, which it does. Sell zone up here. I guess now we can say buy zone down here. You can't assume that's going to be a buy zone if it doesn't hold, because then what's the point of the pitchfork, right? You can say this is the rate of change. This is the mean. I expect this to be at this price at this point in time. And this will give you a 3-figure value by the end of the year, which is kind of a 4x-ish from here. So you definitely want this cruising inside of the pitchfork to be confident that the mean will hit. And again, if it gets to 130, 150, that's definitely a sell zone, and you can tell me to have fun staying poor or whatever. But based on the rate of change since 2018, that's definitely been a good place to sell. Link BTC has this ultra wide, double wide trailer pitchfork. It reached mega highs up here, mega lows down here. It's even below those lows now. It doesn't look terrible for bullish reversal. It's sitting just below the 200-day moving average. It previously had an Adam and Eve that had popped up from, broke this yearly pivot. Now it's below all that stuff again. Potential inverted head and shoulders here. It doesn't look super bearish, right? Just ranging, but it definitely doesn't look like this thing's just going to have a mega run anytime soon. So nothing super exciting there. And against ETH, it is at multi-month lows or nearing multi-month lows. It's had a series of ultra long consolidation periods. The most recent one took several months to eventually break down, but there is a bit of a bullish divergence here. Ultimately, most of the volume sits much lower, yearly pivot much lower. But on the flip side of that, the mean reversion target sits at 0.1 to 0.12. So I'm kind of lukewarm on technicals for Link. It's not going anywhere based on fundamentals. We definitely need oracles. We need services like Link. They fuel things like Enzyme, non-custodial portfolio management tool. I trade both an ETH-BTC fund and DeFi portfolio here. You can track everything, including AUM, performance, allocations. You can see all the coins I'm in. You can see them in Link here somewhere in this list. It is the second highest allocation currently. So it's not like I'm not a believer in near-term price appreciation in the USD realm. Other stuff you can see here, deposits, withdrawals, as well as all the trades I make in and out of yield plays, all of the dexes I'm trading on, that sort of thing. Amounts exactly when I do it as well. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.